Now I'm gonna explain why no-doc funding is soon about to be extinct. Financial institutions are now putting a greater emphasis on income verification, so verifiable proof of income. I've learned over the past couple of years that whenever there's a credit product that has low barriers of entry, it's only a matter of time before that credit play gets played out. I predict the next credit play that's going to get played out is the Chase no-doc business credit card play. So for those who don't know, Chase is the largest bank in the United States. Now, they'll give you up to $150,000 in business credit cards with no documentation. And this is something you probably heard all over social media. I can get you no doc funding through Chase. 50, 75,000 on a credit card, that's really nothing to them because Chase has trillions of dollars. That's little money to them. So they can absorb a lot of people getting access to these cards. And even if there's a certain level of defaults, they can absorb that because they're the largest bank in the United States. Now, the top banks where people are trying to get accounts removed is going to be Navy Federal and Chase. And again, I see a lot of credit reports. Navy Federal is super generous if you have bad personal credit. So it's not too far-fetched that someone with, let's say, 600 credit score, 620 credit score can go and get a $25,000 Navy Federal credit card. I've seen it dozens of times, right? That's no secret. That's why everyone's trying to get into Navy Federal, all right? And then you have Chase. Right now, the most popular funding play is the Chase no doc up to $150,000. Chase has loosened up as far as underwriting. So they took advantage during this whole rate hike where a lot of other institutions were pulling back. Chase really started to lend out more, right? To grab a bigger market share. And so in doing that, more people were able to get approved for Chase personal and business credit cards. If anyone remembers back in the day, Chase was super hard to get approved for. You know, you have the 524 rules, and really they only cater to prime credit. So if you have over a 720 credit score, that was really their target demographic. They really weren't working with people in the mid 600s and lower credit scores. Like I said, what I've been seeing is that a lot of people are now trying to get these Chase credit cards off of their personal credit. So what happens is, let's say you get a business credit card for 70,000, 50,000, and it goes into default, that's going to hit your personal credit report. So what I've started to see is a lot of Chase and a lot of Navy Federal accounts being requested to get removed off the credit report. So what this tells me is that when we start to see a lot of this, a lot of defaults, people getting the bag, running off on it, the banks are going to switch up. They're not just going to let that keep going on. And we've even seen it with Navy Federal recently, where Navy Federal is canceling people's membership. If you have someone as an authorized user on your credit card that ran off on Navy Federal, they'll even threaten to close your account down. I know a lot of people who are now funding experts, right? And so they say, okay, I can get you 150,000 through my relationship manager, right? Now, the thing is, a lot of people think it's some type of secret back end deal that's going on when people say, I got a relationship manager. A relationship manager could be just a regular employee in a branch. It's not something special where people's like, oh, I got my reps. It's like you're working with a senior level executive at Chase. That's not the case. A lot of relationship managers are employees that work at a branch. One thing I will say is that it is better to go through a relationship manager versus just applying online, right? There is a difference. I will admit that. And again, Chase is giving out the bag, but what I'm trying to say is that they're not going to be giving out that bag for too much longer with people who just have an LLC and you got a 700 credit score. Because what's happening is there's a lot of defaults happening. People getting this money, 0% funding, and for the most part, are not putting it to productive use. A lot of people are just getting this money and blowing it, right? Going on shopping sprees or even just living off of credit. That's another thing for a different video, different time. But nowadays, people are literally living off of credit. Nowadays, everyone does funding. Everyone has a relationship manager. Everyone is helping people get access to funding. But the majority of this is just going to be they're submitting applications for you that you could probably do yourself and charging you 10%, right? That's what 99% of funding companies are doing, right? Funding Grow has been doing it for years. So that's basically what people are doing. They're getting you credit cards, personal or business credit cards. That's really it. Because the majority of the people who are getting these 0% credit cards don't really have a business. That's why it's so popular, because it's like I can get 150,000 with no docs. I don't even have to be generating any income. And that's the dangerous part, because as I was saying, whenever something becomes super popular, it's only a matter of time before it gets ruined, because people are running off on the banks. That's happening with Chase right now. Now, again, Chase is a big bank, so they can absorb those hits, but it's only a matter of time before they change up the underwriting criteria or start requiring that you have some type of revenue or verifiable proof of income. Another thing that's recently happened is that a lot of people who decided to start an LLC back in, let's say 2020, 21, 22, 23, and they chose consulting business, right? That used to be looked at as low risk, but now a lot of banks are classifying these professional technical services, right? So any NAICS code that starts with a 541, that's now being considered high risk. And the reason why is because that was the default business classification that a lot of people who just started an LLC decided to jump into. It was thought of as a safe option, right, as far as business classification. But because there's been so many defaults on these consulting businesses, now that's labeled as high risk. So for those who don't know, when it comes to business credit, your business credit score can get lowered, not only based off of your repayment history, but also the industry that your business is classified as. So if you have a lot of, let's say, restaurants that are defaulting, or trucking companies or consulting companies, your business credit profile is going to get lowered as well. And you can go into high risk category, even if you are paying your bills on time every single time. So that's the difference between personal and business. With personal, only thing that matters is your repayment activity. With business credit, your score can get lower based off what's happening in your industry. And another reason why a lot of these no-doc business funding plays are going to go away is because right now, on the personal side, it's way harder to get funding. On the business side, it's much easier to get funding, right? Because again, consumer debt is at an all-time high, defaults are ticking up, and we're starting to see a lot less jobs being available, and the unemployment rate is expected to creep up. So lenders already knowing this, they're not going to want to extend on the personal side. So business credit has become way easier. Personal credit has become a lot harder. So what people are doing now that they can't get personal credit, because again, with personal credit, usually they're going to ask for pay stubs, and usually you're going to have a high credit score. So since it's harder, even for people with like 800s, right? Like if I want to go get a loan from a credit union for 50,000, that's going to be difficult, even if you have documents, good credit, and paperwork. So what people are doing now who don't have docs, maybe they don't have pay stubs, maybe they're not even working, they're just getting an LLC, getting funded under the business. They're going to Chase, they're going to a couple other ones, right? And they're getting $50, $75, $150,000, whatever the case is. And then basically just utilizing that capital to do whatever. Most of the time, it's not really put to a productive use. And again, I'm just a messenger. I'm sharing with you guys what I see. I see a lot of defaults. Our credit restoration right now, there's endless demand. And as far as the no doc funding, mark my words, that's going to be tightened up. I've talked about Pinwheel API. I talked about TrueWork, which they have read access into your payroll data in the same way that Plaid has read access into your banking activity. So it's another type of income verification. This is being piloted with a lot of banks right now. And I can name a couple of banks right now who are actually using these technologies on the back end. So all this stated docs, stated income, now they could just verify that on the back end. You have Equifax that now has what's called, they've been owned the Equifax work number, which is a database that aggregates all payroll data across the top providers. So they have nearly 100% coverage when it comes to payroll data. And so now when you submit an application, they can pull your credit and verify your income at the same time. And this has been around for quite some time, but now it's being adopted because lenders want more data insights into borrowers. They're not just looking at your credit score, because lenders know it's easy to get your credit repaired. It's easy to get items off your credit. It's easy to add trade lines. So that 750 credit score doesn't really matter. They want to see more additional data points to see what your overall risk profile looks like. So again, right now there's people who are getting denied with 800 credit scores, taxes, and pay stubs. So imagine if you have okay credit, maybe a 700, 680, but you don't have any docs. It's going to get harder for you. I'm telling you this right now. So the best thing you can do is check the box when it comes to all data points. not just your credit score. It's not all about AU trade lines. I know people love trade lines because it's thought of, oh, it's a shortcut hack. But guess what? A lot of companies, a lot of credit unions and banks, they discount authorized users. Even your FICO score, when it comes to AUs, they're not even included in the calculation. Now, the other day on Instagram, I saw a credit expert telling people how to get around Plaid verification. It's like, oh, you just take some money from one account, transfer it back and forth to another. Let me tell you this, that does not work because Plaid is not just looking at the overall number of transactions. They're looking at your average daily balance over a certain period of time. Because again, Plaid could go back as far as I believe 24 months. They're also looking at the source of the payment, right? Is this coming from a payroll provider? Is this coming from a merchant account? Is this coming from an invoice, a point of sale system? So it's much more sophisticated than money coming through a peer-to-peer type of platform. Like it can already account for that because it's using artificial intelligence. So that's not going to work. So I see people saying like the easiest way to qualify is to actually qualify, right? So one of the easiest ways that you can actually qualify for funding when it comes to income verification is to actually run payroll. So when you run payroll, not only do you have pay stubs, but you have electronic verification. Because like I said, you have these companies like Pinwheel API, TrueWork, The Work Number. They aggregate payroll data. So they're able to know when's the last time you got paid, the next time you're going to get paid. They even have it as detailed as your time in attendance. So, there's major like time and attendance platforms like Deltek where, through your pay cycle, you put in how many hours you work so they could forecast how much money you're actually going to get paid based off of how many hours that you clocked in your current payroll cycle. So it gets a lot deeper. And this is AI, artificial intelligence being implemented within these financial institutions. Another thing we're starting to see, I talk about this all the time, especially with business funding. You gotta have your tax returns to get big boy funding. All right, credit cards, that's cute. But you want the loans, you want the lines of credit, you wanna open up a franchise, you need $250,000. You're gonna need tax returns. I mean, you can get no-doc credit cards for now, but eventually to get the big funding, you want a construction loan, you want a mortgage, you're going to need paperwork, all right? So most importantly, tax returns. So there's a company, a fintech company called TaxGuard. TaxGuard is utilized by several different loan origination platforms and dozens of lenders, all right? So TaxGuard checks to see if you owe any back taxes, if you have any tax liens, federal, state, or even local. Or let's say if you haven't filed your taxes yet, lenders are now going to know that, all right? So if you haven't paid your taxes, if you haven't filed your taxes, if you owe back taxes, all of that is going to come to light. So when you're applying for these different loans, they're going to be able to see that type of information. So take note of that. TaxGuard, I've seen it with a lot of loan origination platforms. I've showed you guys several examples where I personally have been able to get lines of credit, right? So WestBanco, FVC Bank, which gave me $100,000, they use a loan origination platform called Numerated. So Numerated does all of the back-end verifications, Social Security Administration. They pull your credit, your business credit, personal credit. They check for UCC filings. They search your business through the Secretary of State, see that you're in good standing. They use TaxGuard. So they have all these APIs on the back end that's collecting this information, making it so that lenders can get a quick decision. I just got a client, $100,000 business line of credit approved in less than a day, right? So yesterday I gave them the play, and today they actually, did their DocuSign or whatever, 100,000. But the reason why they were able to get that fast decision is because they checked the box on all the data points, right? Filed taxes, business credit, business in good standing, identity verification, all that. So you have platforms like Numerated who do all that on the back end, but they're leveraging these other fintechs that are checking for your payroll data. They're checking for your business liens, your tax filings, your credit, your Secretary of State standing, the Social Security Administration. So they're doing all this on the back end. And so when I see people talking about all this no-doc funding, easy funding, get 100,000, get $500,000 with a shelf corporation, it is 100% bullshit, okay? 100% bullshit. You're not walking into any bank with no financials and getting a $100,000 line of credit with a shelf corporation. And I've said this for years. If anyone can tell me a bank just provide some proof and evidence of an approval using only a shelf corporation with no financials and getting hundreds of thousands of dollars in lines of credit, I'll give you $1,000 cash. I'll do a whole video on it. I'll, tell you guys I'm wrong. I don't know what I'm talking about. Because the thing is, people with good credit and paperwork are getting denied lines of credit, right? So how is it that this shelf corporation with no financials, no tax returns, is just you buy a shelf corporation, you put business trade lines, right? So let me also clarify this when it comes to business trade lines. All right, business trade lines is a good thing. But what people don't realize is that business trade lines by themselves with no taxes, if you have bad personal credit and no financials, no P&L, no taxes, you're not getting funded for business loans and lines of credit. If anything, business trade lines are to enhance your approvals, but your approvals are not going to be based solely off the trade line. Your approvals are going to be based off the financials and your personal credit, maybe even your cash flow, banking activity. But having established business credit could be the difference in, let's say, a $50,000 approval and a $150,000 approval, right? Because you need comparable credit. But a lot of people think that you're just going to get business trade lines with bad personal credit, no financial. Like, I get people all the time, like, look, I'm in credit repair right now. I don't have any docs, no payroll, no taxes, nothing. And I'm trying to get 750. I literally have people saying, oh, I'm trying to get 750,000 in business funding with no docs. I'm gonna add these business trade lines. I'm gonna add these AUs. I'm gonna add this zombie debt, or, I'm gonna get a age primary, stuff like that. And the thing about it is, like, a lot of these funding companies are playing off your thirst, right? Because if there's a shortcut or a perceived shortcut, you could sell that all day long. People are going to eat it up all day long, right? That's why the trade lines are popping, the CPNs are popping, because people want shortcuts. They don't really want to actually do what it takes to qualify. They basically just want a quick hack, a quick shortcut. That's what gets the views. That's what gets the interest. Anything that's super easy, it gets played out. Now, I'm not saying that back in the day you couldn't get funded just based off the business information and not having any income or any, proof of revenue, anything like that. Back in the day, probably pre, the first Great Recession. But since then, banks have changed up. You look at any major financial institution, all the big banks, you want that business line of credit, you're going to need to show some type of income or revenue. You're not just getting a no-doc business line of credit without showing money coming into your bank account. Now, maybe you can get it without taxes, but in lieu of that, you're going to need to have money flowing through your business checking account. Now, there's cash flow based underwriting. There's a lot of fintechs that don't ask for tax returns or P&L, but you have to have the money. You have to have the income flowing through. It's like, okay, you have no money in the account. You got subpar credit, but you have an LLC, and you got Quill, Uline, and Granger, and maybe a couple other trade lines. And you think the bank is about to give you 750,000, $500,000. It's just not happening. It doesn't matter if you have a 10-year-old shelf corp, right? Like, you need to have some type of revenue flowing in. Now, you can get credit cards. Don't get me wrong. You can get a business credit card with no docs, no evidence, nothing like that. But to get the real big dog money, it's not happening if you're not showing that you're making the money. Now, I know that's not what most people want to hear, but it's the truth. As someone who's been able to get approved for hundreds of thousands of dollars, construction loans, mortgages, business vehicle loans, millions of dollars in funding. And I've documented this on social media for the past 5 years, showing you guys what I've been able to do just myself, not even to include a lot of clients I work with who, are getting acquisition loans, they're getting franchise loans, is because they're checking the box with all of their data points. They're not utilizing shortcuts because, we've prepared them. We've gotten their paperwork. We've gotten their accounting set up. We've gotten their, profit and loss, their tax returns filed. We've built out their personal credit profile, their business credit profile. So it's a multi-pronged approach. It's not, let me just get some business trade lines and walk into a bank and go get funding. Yeah, again, like I said, the chase play is popping for now, but mark my words, whenever you hear a lot of people talking about it, especially, I'm gonna keep it real, a lot of black people talking about it, it's only a matter of time before a handful of rotten apples out of the bunch start running off on the banks switch up, and then guess what? It makes it harder for people to get funding moving forward. In 2025, y'all got to get y'all paperwork together. And I'm going to keep reminding people, because I know people hate hearing about paperwork. It's like paperwork is like kryptonite to the funding space. And the thing about it, I used to think that people who didn't have any type of revenue or business model are the ones who basically refuse to provide paperwork. But what I found is that you have brick and mortar companies and businesses that are actually transacting, making money, that refuse to provide paperwork when trying to access capital from the banks, which doesn't make sense. So what that boils down to is that a lot of people are just unorganized. And that's the reason why a lot of businesses have to go and get merchant cash advances, because you don't have your paperwork in order. So you're getting subjected to higher cost of capital, is eating into your margins, and you're not able to really take advantage of the capital markets because your paperwork is not in order. So again, in 2025, it's all about having your paperwork in order. You got to get your paperwork in order. Anyways, that's all for today. Till next time, take it easy, and we'll talk to you soon. Peace.